Welcome into the Friday, December 15, 2023 installment of Market Plus. Joining us now, Dan Hueber. Dan, I'm going to do a tease here for a minute, okay?
Okay.
I'm giving you time to think about this. I'm going to ask you at the end of our discussion, which market, where have the bull or the bear influenced the most and not gone into hibernation yet?
Okay.
Because it's been a warm December.
Sure.
Think about that.
Okay.
Let's start with corn, though.
Okay.
Instead of animals, okay? Ron in Iowa wants to know, with the current corn carryover, the current demand, if we achieve trendline yields in 24, will there be a 3 starting the corn price?
I think there's no question about it. So, I mean, even today, 2.2, 2.3 billion carry out from last year. Add a record crop on top of that. We're sitting on 16.6 billion corn. If you increase that again next year, I don't see. Granted, the only thing that would really throw that off would be a major disruption somewhere else in the world. I don't know where that's going to happen. So,
I'm going to, I don't necessarily say argue with that, but I want to throw in something that we've talked about a couple of weeks here: the weather. Last year at this time, a lot of the grain belt had good subsoil moisture. They had fall rains. Those have gone away if you look at the drought monitor in areas around. I mean, the Mississippi is low. I know that there's no crop in the Mississippi, but the basin has been dry. Do you anticipate that the weather story will be a little more sensitive given our low conditions of subsoil moisture in some of the corn growing areas?
Not necessarily. And again, those are all probabilities. I mean,
absolutely,
no question about it. The same token, I think we have never really, adapted to how well the hybrids of today sustain themselves through stressful situations.
And do you think that the market and those who trade will look at it and go, no, you said it was dry and you were going to have the worst crop ever, and look what you did?
I think that is in the back of their minds at this point. I don't think we react quite as much as we used to. Plus, I think there is not that there is an emotionalism in the market that will always be present and part of the world we live in, but I think it's reduced from what it used to be. I think there's a lot of computers making decisions. Computers don't get emotional about the weather, so.
Yeah, computers and emotion. Yeah, program that in to your AI.
Make that
I guess on a follow-up to that 3.
Sure.
High 3, mid 3, low 3?
Well, anything in the 3s is going to be disastrous unless we're looking at record yield. So I would tend to say mid to high 3s.
So what do I do? You're not saying that's what's going to happen.
Sure.
But what do I do if that is a possibility right now, today, with those 3 scenarios that are possible?
Well, today I guess we have the luxury at this point in time that, we're dealing with the uncertainty of what our next crop is going to be. And at this point, nobody knows. There's already discussion that we're probably going to lose some corn acreage, which may shift back into soybeans. So you tend to want to build some risk premium between now and at least in the end of March, until we get some kind of an answer on those figures. So, yeah, I don't think you start panicking and selling at current levels, but I think 10% rallies from where we stand in any of the corn months is something you reward at this point in time.
Well, then I guess that rolls into Mitch in Iowa's question. Are better prices ahead for those still holding corn? What's your exit strategy?
Two things to keep in mind in the corn market is, one, yes, I think we have some rallies ahead here. Yet again, I don't think they're going to be substantial rallies ahead. I think your greatest risk is not taking advantage of the carry. When you look at where July corn was versus where December expired this week, you've got a 45-cent premium. That's your risk. I mean, if corn was worth $4.50 as it expired in December, why is it not going to be worth $4.50 come next summer, if the demand has not shifted at this point in time? So if you're not taking advantage of that 45, 50 cents, there's your risk to the downside at that point. We don't have to take nearby corn a lot lower than it is today, but, you're going to lose a lot of opportunity by not taking advantage of what's out there, even at today's prices. Yes, again, I think if you get a 10% rally, you sell the month that's got the best amount of carry to it.
Sell the month that has okay. Yeah.
Highest premium.
Yeah. That makes sense.
Yes.
All right, we talked a little bit about feed with that corn for livestock, but let's go back to the hog market for just a little bit. Robert in Minnesota had a question for you, and it's a little deeper than what we did on the television show. Is the bottom in on the hog market? And when do you believe we will start to see numbers drop from liquidation in the sow herd?
The first question, I think we're probably at that bottom in the hog market. 2 days ago, if you had asked me that, I'd said 50-50. We may be close, but we weren't there. I think the performance of the last 2 days of this week probably said we've seen enough to the downside, and we can start looking for that normal kind of seasonal response higher into spring, summer months. That said, I don't know with the price of feed ingredients coming down, particularly if meal continues to deteriorate, I don't know if we really start seeing a lot of liquidation. Most of this hog production is commercial at this point in time. They're geared to their packing plants, and I think it's got to be a lot of red ink before that happens.
We were discussing this a little bit before we rolled, and I had heard back this summer, and I think a lot of people had, is that there was sow liquidation already happening in the United States.
Sure.
You think there's sow liquidation happening in China?
Oh, absolutely, in China, absolutely.
And what does that mean then for us here?
Well, it could be a boost for our export trade. And really hog exports, or pork exports, I should say, have really been fairly respectable all year long. We're seeing the cattle turn the opposite direction here at this point in time. So if, granted, China, it's a balancing act for them. Of course, they pushed and pushed and pushed to rebuild their herds after the African swine fever debacle over there. Of course, they expanded dramatically and with these mega farms, and now they've hit the wall. They don't, they just have put too much pork out there at this point in time. The government is trying to do all they can buying up pork, to trying to stockpile, to try to alleviate some of the retail pressure, but they've gone to record low prices over there. So absolutely, you're seeing some of those mega farms become smaller mega farms at this point in time. So yeah.
Two more questions on commodities here. Let's finish up with King in Texas. Will the funds finish the year net short corn for the first time in 16 years?
I think the odds are, considering the length of time we have to finish out the year, I think they will be still short, but it will have reduced significantly. I know they were big buyers again this last week. I didn't see the total fund numbers. I know the large spec was a large buyer, still maintaining a short position, but I think 2 weeks ago they were 150,000 contracts short. But, they could have that knocked down to less than 50,000 by the end of the year easily.
Well, what about the outside money that's maybe not necessarily the commodity fund folks normal, but those that look to park money? The stock market had another good week. And sometimes that money, if we're up in one, we're not up in the other.
Right. Well, you tend, money's going to flow back and forth between where they think they're going to get the best return. So, could some of that be moving and exiting over to the equity markets? Certainly. But it, that would not tend to be the short player, I don't think. It's, nobody's going to go over and try to. Not many are going to go over and try to short the S&P 500 at this point in time.
No, not the way it's performed.
Right.
Let's talk with Charlie in Ohio and his question. By the way, thank you for your questions each and every week. We always appreciate them. Look for them on Facebook and also on X where we ask for them. And Charlie says, do you anticipate the basis on corn or soybeans to strengthen faster? Which one?
One or the other?
Yeah, one or the other. Which one?
I would tend to say... I think I'm going to favor corn, just in the respect. I think there's we have a little bit better chance for demand on corn. Once we get after the first of the year, not that the processors still won't be interested in soybeans, but the demand side of it could just fall off a cliff because South America will take over the market again. So,
all right, your bears and your bulls. We've had a warm fall.
Yes.
Hibernation hasn't started.
Not quite.
The bears.
Yep.
Where's the bear market the biggest and needs to go and hibernate?
I think the bears are probably going to hibernate most rapidly in wheat, at least for a while. Secondly, in corn. They may not go to hibernation of the soybeans. So.
And do you see, so maybe the bear hibernates in the wheat market. Does the bull come, or is it just there's no...
Well, not that again, we're seeing enough demand. You could say there is some bull there, but extended bull, no. I think it's more of a short covering of those who are just laying on the short side already. So,
all right. Thank you, Dan, for playing along.
Oh, my pleasure.
All right, good to see you again, Dan Hueber.
Yes.
Merry Christmas to you as well. Next week, we are going to showcase the latest winner of the World Food Prize, and we'll have the commodity market analysis with Jeff French. Thank you for joining us. Have a great week.